Let's talk multi-baggers in the stock market. My name is Nikki Dunn. I'm a certified financial planner, registered investment advisor, author of the book Do This With Your Money, and I have spent a lot of time in the financial markets building a multi-million-dollar investment portfolio. Today we're going to talk about multi-baggers, basically getting multiples of your investment back by something going really well. We're going to use Abercrombie and Fitch as a stock case study today to talk about how I found this stock and it became a multi-bagger in my own personal portfolio and how to approach these opportunities going forward. Quick disclaimer, this video is for educational purposes only. Anything that I talk about in terms of stock tickers or returns, it's all in relation to what I've personally done in my portfolio and what has worked for me personally. It is not a recommendation for you to buy or sell or do anything. But I do think that with Abercrombie and Fitch as a stock, there are a lot of lessons within it that I think some people might find helpful. A lot of financial advisors are against stock picking, and I don't think stock picking is for everybody. I think that some people have a higher risk tolerance. They've seen the Apples, they've seen the Nvidias. They know that stocks can make huge moves and they can make a lot of money. A lot of people in the tech industry that have received stock-based compensation from some of these large leaders like Facebook, aka Meta, or Google, or any of the others, Amazon, they've built a lot of wealth in individual stocks. You can tell people till you're blue in the face that people shouldn't pick stocks. They're probably going to lose over the long run. But it doesn't change the fact that people have seen it with their own eyes, how certain stocks can make huge moves and build a lot of wealth for individuals and families. So I think that it's kind of one of those things that it's okay for some people to do. It's maybe not okay for others to do. I'm not against it. I actually utilize a core and satellite portfolio approach where I have individual stocks in my portfolio and ETFs. So, you have to find what works for you, but I'm not one of those advisors that's going to shame somebody for wanting to pick stocks. I say, let's find a strategy that is going to work within your goals and within your risk tolerance. With that said, Abercrombie and Fitch is the talk of the town today, specifically, while it's currently up almost 30% on the day. I've been talking about this stock. I'm a retail investor. I've invested in Lulu, Walmart, Ulta, Abercrombie and Fitch, many other retailers. I've been talking about Abercrombie and Fitch's turnaround story for a long time. I even have tweets that date back to 2019 talking about Abercrombie and Fitch's turnaround. So I would say that I've been beating the horse on this for a while. Those who really know me well know that I've been talking about this since 2017. Step one of finding a multi-bagger in the stock market is looking for some kind of stock that everybody's hating. Meta was another one that was down a lot. Everybody hated the stock. The stock was down, over 70% in 2021 into 2022. People thought it was going to be left for dead, and it made an absolute full recovery. And another stock that I was, eyeing and buying near the lows, because this is what you want to look for. You don't want to be buying individual stocks when they're at their highs, at their peak love affair with the markets, and everyone in the market loves the stock right now. Nvidia is one of those that's everyone's loving it, but it's at the highs. Is that really going to be the best time to go all in on a name like that? You want to look for something that people are hating. Okay, so I knew everybody was hating Abercrombie & Fitch. I was going into the stores at the time, 2017, 2018, looking at the merchandise, realizing that the merchandise was changing. So what happened is everybody hated Abercrombie & Fitch after the CEO made very terrible comments about body images and, how people's bodies should look in the clothes or whatever. And then it's just everybody hated Abercrombie after that. And so years later, I go into the stores, I see the changing in merchandise, I see the changing in branding, just the little things that made me stop and go, gosh, these clothes are really cute. These are like, I can't believe what I'm seeing in this Abercrombie store right now. And so that triggered me. Okay, I'm standing in this store that everybody used to hate. I'm a retail investor, love retail stocks. let me look into this more and see what's going on under the hood. Let me pull up the earnings reports. Let me get into the fundamentals of the stock. Let me find out what's actually going on. And the Abercrombie brand was in the pits. Okay. Comps were absolutely super negative, and it just looked really ugly for Abercrombie's brand. Hollister, which is owned by Abercrombie, was doing really well. Completely opposite. But Abercrombie brand was in the dumps. So I was actually going into stores and kind of doing market research as if an analyst would, right? A retail analyst would, going into these stores and figuring out what's going on, sniffing it out. So that is what I do with a lot of the stocks that I invest in on the retail side. So look for something that's hated and go inside of the store, or in any way that you can do market research in person, go do that market research. Sniff out the situation, see what you can find. In my case, I was finding that these clothes were really cute. How did everybody not see what was going on at Abercrombie right now, right? Brought my friends in, got my friends addicted to the clothes. And so this was the pattern. And I was like, okay, I have validation. This truly is a very changing brand. Those were kind of the first two steps with me finding this multi-bagger. Management was constantly talking about the turnaround in the earnings calls. If you listened closely enough, you could see that they were hyper focused on turning Abercrombie's comps from negative to positive, completely revamping the brand. So as an investor, I'm going into the stores, I'm seeing the actual result of management's efforts. I'm hearing management constantly talking about their investments in the business to drive the turnaround, right? They talked about the turnaround all the time. So I knew management had their eye on the prize. So the other component to add to this multi-backer was I had to wait. This is Abercrombie's chart today. You can see that this is the big candlestick that we saw today from earnings that just has been phenomenal to watch. But I had to wait. I was buying in 2018, 2019 at the lows. I think my average cost basis was somewhere around 15, 16 between all my buys. And I just had to sit and wait for price action and for management and for this consumer sentiment to do its job and see if my thesis was going to play out. If I saw anything in the interim that was going against what I thought was supposed to happen with the brand or with the company in general, the fundamental data not lining up or anything like that, that would have been a cue to say, hey, Nikki, this isn't turning out how you think. Abandon ship, exit the position. But none of that was happening. The comps were getting better. The fundamentals were getting better. They were buying back stock. There was just so much that was going right that I didn't have any reason to sell the stock. In fact, I just kept getting reason to buy more stock. So I think that this is the part that a lot of investors in individual stocks get wrong is they don't have the patience, for one. They get antsy when price goes against them. I mean, I was in this stock throughout the pandemic when it was selling off. I still had, shares in Abercrombie and Fitch, and I had to sit through that, right? And I had to have the patience. And so you have to have strong conviction in your fundamental analysis and your thesis to be able to do that. And it's not a coincidence that this has played out like this and done so well for me, right? And this is a case study. There's been multiple different companies that have done very well, individual stocks that have done very well, but it's not a coincidence. It's multiple things that aligned to make this happen for me in terms of this position. So another piece of this puzzle that made this investment work and turned it into a multi-bagger was I paid attention to the short interest, and it had a high short interest for a couple of years. Now, short interest we learned about through GME. When GME, the Wall Street bets, mania drove GME to crazy prices. What that was it was a short squeeze. So people that bet against the stock, they short the stock. So if the stock goes lower, they make money, right? Normally we buy stocks and they go higher and we make money. So just imagine the opposite of that. Well, if too many people are piled in short on a stock that's actually not a terrible stock, then when that buying pressure begins, those shorts end up getting squeezed out of their positions and they can lose an infinite amount of money. When you buy a stock, you can only lose what you invest in it, right? It just goes to zero. There's a floor. But when you are shorting a stock, it can go to infinity if it wants to. Of course, that doesn't happen, but things can go very far, very fast, and bring a lot of pain and losses to short sellers. So Abercrombie actually had a high short interest. This is the short interest data, and you can see in 2014, the short interest really started rising. It was like peak hate for Abercrombie's brand, and the stock wasn't doing well, and it was just not lovely. However, I personally saw this as an opportunity. So I was getting kind of, jazzed about the fact that I had a brand that was on the verge of a turnaround that was very under the radar. No one was really paying any attention to it. B, I had a brand that, fundamentally was starting to perform and show proof that the turnaround was working, especially in 2020, 2021. We really started to see those comps ramp up in a positive way. Then I had high short interest. So I had fundamentals aligning with a very hated stock that was a very shorted stock, and shorted stocks can move very far very fast because of that short squeeze phenomenon, and these shorts just have to get out because, they're kind of screwed. So I had a lot going for me here with Abercrombie and Fitch, but I got to tell you, it was not an easy road. I had to be patient. I had to continually pay attention to the earnings reports and make sure that things were going as they should have been. I had to make selling decisions along the way as price was going higher and higher. Today I ended up taking out some profits because I was out. What are you going to do with the stock up 1,000%, 1,200%? I mean, these are huge gains for individual stocks, especially in a shorter amount of time. I won't say short amount of time, but fairly short amount of time. Some stocks, it can take a decade or two to get those types of returns, depending on the stock. So I love Abercrombie and Fitch as a case study, and just looking at this chart, it's absolutely gorgeous. It's a retailer. You would think this was a semiconductor or a tech company, and it's not. Their growth rate at Abercrombie is really high. The comp was 31%. In the recent report that we got today. That is extraordinarily high for a retailer. And this is growing at a faster rate than some tech companies right now. I will say that stock picking is hard. It's a challenging thing to do because you really have to understand fundamental and technical analysis to make it work for you over the long run. You have to understand position sizing. You have to position the right types of individual stock investments the right way. Know your quality over your higher risk stock picks. These are the things that are going to help you kind of stay the course and make this actually be worth it. For me, I love my core and satellite approach. I love having my individual stocks that I buy and my ETFs. And sometimes my core portfolio is performing better than my ETF portfolio. It just depends. Sometimes it's the other way around, right? But generally speaking, I have found that to find multi-baggers, you have to be doing what I just mentioned. You have to pay attention when everybody hates something. You have to dive in and do as much research as you can, even if it means you physically going to stores or going to test different products to see what's working and what's not, what's hot, what's not, what stores have lines at the cash register, what stores are ghost towns. And a lot of that, very anecdotal in-person research can go a long way. Talk to your friends. What are your friends wearing, using, technology-wise, or whatever else, whatever your sector is that you love to invest in and research. So I think that it can help a lot to get down into the nitty gritty and get your hands dirty a little bit. Learning fundamental analysis is a must. I mean, if you're trying to pick stocks and you don't know anything about free cash flow or debt ratios or, net income, shares outstanding, dilution, you need to know about all of these things to be a successful individual stock investor, or find somebody that knows about these things, right? Like I'm a registered investment advisor. I can help a DIY investor. I can look at their portfolio and take a look and see, give my opinion and potentially allocate differently. There are different things that you can do to just make sure that you're on the right track with your portfolio. And again, this isn't investment advice. Don't go buying any of the stocks that I've mentioned. Obviously, this is really a case study to show, because a lot of people want to find multi-baggers. They want to find these stocks that are going to 10x plus, right? And it's not that easy, but it is possible if you approach it the right way. And that, a lot of people will yell at me for and say, you're incorrect. Everybody should just index the S&P 500 and call it a day. And like I said, that could very well be the case for you. But for others, many others with higher risk appetites, higher risk tolerance, they want higher returns. The S&P 500 is fine, but they want to see outsized returns, and they know that it's possible, so they're going to try to do it. So my goal is to just help you learn how to do it the right way. Don't just go picking stocks and willy-nilly and not have a strategy. Because as you can see now, there's a lot that went into Abercrombie and Fitch and me finding this idea and holding this idea and taking profit on this idea. It was a process. Whether you're a do-it-yourself investor that wants to refine your stock picking skill set and you're looking for some education or resources, or you want to work with somebody like me one-on-one as an investment advisor, I have everything that you need, every option. Go to the description in this video and you'll find the links to everything that I can offer you. Don't forget to hit the like button if you found this helpful or insightful, and subscribe to my channel if you're not subscribed. I'll see you next time.